Shout out to the VIP top level membership. This is London with Bitcoin Spike, former hedge fund owner, non-SEC. You guys know that, not financial advice either. Now, that was then, this is now. We're talking about Bitcoin and some difficult patterns. We're going to go through the pattern framework we have held thus far. In terms of the specifics, I want to first shout out to all of the VIP members. We're going to invite you to join this link right here, boom, next to Texas on our Twitter. And guys, tons of good TA here. We just invite you to plug in quickly in terms of the market. It will not wait for you. That's the bottom line. So we are going to stay ahead of it. And guys, just shout out in the chats. Go ahead and hit the like button. Let me know that you are here. Have some volume discussions today. Some volume. Just put this in the back for the VIP. I want to make sure that you guys get this. Now, we have a variability. I say this level of variability. Let me go ahead and let's hide this for a moment. Let's take away this volume indicator that we have. In terms of the pattern formations that we are looking at, we have some difficulties. You all can feel it in the market. Now, VIP are trading. I know that you guys are doing extremely well. As we look at essentially the presentation of the technicals to us as traders, we are struck by one specific fact: volume. Volume right now, let's take a look at the hourly. Volume is declining. Okay, volume is declining. One specific aspect of inverse head and shoulders is that to constitute the reversal that people are looking at, and we'll go through some context here, and you guys know in the back VIP we've been kind of hammering at this for a while. I've been saying inverse head and shoulders are difficult. You know this. We're pushing out to the side here. What's going on, right? We've broken out of the neckline, okay? We could go to the candle wicks. We could go to the hourly. The important thing is that now even on the hourly, 4 hourly, etc., on the lines, we have broken out. We're pushing up and over just slightly that 200 exponential moving average on the 1 hourly time frame. So that's a good hurdle to get up and over. We would like to get on the 4 hourly. Really, like we're on the 50 on the 4 hourly. You guys know this. We'd like to get up and over, guys, the specific 100, then the 200 on the 4 hourly. Those are goals, guys. In terms of a 6% move, 22,600, or a let's say 20% move, 19% move to 25,400. Okay, now those will converge. They will come down to the price action. However, I do want to point out the following: in order for us to get up and out, we need some volume. We do not have any volume. You understand this, guys? Look at the volume. It is just sunk in the floor. So in terms of that, I wanted to bring this to your attention, and I will let me raise up that volume so you can see exactly where we're at. But Torque in the house. What is going on, Torque? Nice to see you, brother. What's up? What's up? VIP in the house, Torque. Torque had a great call. He had the second crucial call, you guys, on Bitcoin in the last, I'm going to say week, Torque. Nice call today, brother. And once again, Torque in the back calling for the bulls. Boom, before a move to the upside. Let's go and relive that. That was a nice move, Torque. We traded that. Way to go. Torque has got a little touch. I'm going to tell you guys in terms of calling specific moves. Boom to the upside. Torque in the back. He's had it this week. I'll tell you guys, he's had it. He's been on it. So he did it again today. And boom, we came through with a move to the upside. Nice trades. Nice action. So in terms of the volume indicator for the inverse head and shoulders, okay, now I've raised up the indicators here so that you can focus on it. I've got open interest below. I've got MACD, okay, MACD above that. Then I've got the CCI and the RSI. Here's a good look at your volume. Let's look at the daily volume if we can. Daily volume, literally just heading down off the cliff. Boom. We need to pick up the volume, guys, in order to complete, technically, I'm going to tell you, technically, in order to complete the head and shoulders, we cannot be heading down. And just a classic interpretation of inverse head and shoulders, just following, it's not my opinion, guys, it is New York Institute of Finance, like where Wall Street goes to school, like literally, in terms of that, we're looking at a need for some volume to kick in. We got to get some volume here, guys. So very important that we would just have this discussion, because I'm normally not that big on volume. You guys know this. Leo, what's up, my man? Leo in the house. So we got Torque. What's up, Torque? Boom. And we got Leo. We got Freddie in the house. What's up, Freddie? My man. Leo. Boom. Let me see what I got. Torque, Leo. We got Freddie. And I know that VIP are just trading, guys. You're rocking it. It's nice to be in the back because I know everybody's trading. I'm like, yo, what's up? this is the way to do it. And I'm just impressed because I know you guys can outdo the average trader, guys. You could do out the average trader in probably a good day for what they're trying to accomplish in like a week or weeks or maybe a month. So yeah, you guys are getting the skill set down. It's nice to be in the trade group. Out of all honesty, it's nice to be in the group. So in terms of this, boom, look at this, guys. It's just like, come on, man, just give us some green bars here, some green volume bars indicators. Boom, we need the buyers to step in at some point. That's what we've been feeling here, and it's caused us to push and grind, and to the extent that we have some bad patterns to look at, guys. I got to tell you, is this an inverse head and shoulders on the daily? Potentially, yeah. I mean, you could stretch that and say that's a left shoulder, that's a head, that's a right shoulder, but more so what the market is looking at. It's just not a good signal from the daily. You guys know this. We're ready to trade it. We're ready for it to go up, guys. We've been bulls in the back like you wouldn't believe. So when I cut a video in terms of kind of a worst case scenario, or what's like the video last night in terms of Elliott wave analysis on the daily inverted, good gosh, guys, if you look at that specific chart, it is literally par on par. You guys know that it's a perfect chart to look at if you're looking at Bitcoin right now. It's really impressive. That inverted, was it the London bullion market, right? You guys got that in the back, etc. Cool stuff. When you see something like that, you have to understand it's like you're not the only ones. We're not the only ones looking at that stuff, guys. Right? There's probably some big money sitting there looking at that, like maybe not right now, huh? Or maybe we divvy up the orders, huh? Maybe we divvy up these orders and see if we're going to recreate the rest of that chart. A little bit of an opportunity below where we're at. That's 786, still looking for that 786, but looking at this framework, this is not an ideal entry. And we rely so heavily on the daily. You all know this. This is just not an ideal entry. It's not. We're up and over a clearly indicated rising wedge. Like, the bulls don't want to get into a rising wedge. I mean, we just don't. Like, we start getting creative. You guys know this. We start getting a little creative and like, okay, good. We have something that, we're trying to discount this specific rising wedge and saying, I guess we could push into, let's trade up into a bear flag. Let's push this into a bear flag. You start to do stuff like this when you're looking at an entry on a specific time frame like the daily, which is so authoritative. You guys know this because the daily is so strong with the pattern formation. Rarely does the daily just absolutely upset everyone. And I'll tell you, the reason is because it's cataloged. Pardon me. Cataloged. Invent a word, why don't I? But cataloged, pardon, I'm normally very well spoken. It's funny. It's cataloged, it is indexed, it is part of history. It is literally as you would look at in a specific ascending wedge on the daily chart for Bitcoin in 2022. This chart will be around, right? You guys know this. This chart's going to be here. It's not going anywhere. It's going to be printed in Wall Street Journal. It's going to be printed in textbooks. It's going to be studied. It's going to be analyzed. It's on people's desks. It's the daily chart. So when we see a very prominent, I say prominently bearish pattern on the daily, I don't want to say they have to cover themselves, but a lot of things can happen in lower time frames. A lot of surprises, a lot of chaos can occur at the lower time frames. No one's ever going to, if they see those charts, they're not going to hold on to them, right? They're not going on the wall. They're not going on the conference room desk normally, right? They're not going to the board of directors meeting. The 15-second isn't going to make it to the VP, right? Of crypto acquisitions for Goldman Sachs. It's just not. The 15 seconds not making it there. The daily, winds up on everybody's desk, guys. The daily chart, boom. Looking at this, and so like literally, we're looking at a bearish signal on the daily chart. Period. You can't get past that in terms of that. So yes, we've continued to just kind of grind and slowly. It's just like every day we're frustrated, trying not to capitulate back down in this direction. It has been quite the effort by the bulls. Now we have a few issues to get through in terms of, now that's the carryover. If we just look at the carryover from the specific daily, right? From the daily, let me go ahead and expand this. From the daily chart, that's the carryover. We would obviously redraw on the 4-hourly. But the 4-hourly, we're still stuck in this mix. And you guys know we've been pushing, we've been prodding, we've been attempting to get a flat top. Guys, we want, and you guys know now, right? When we don't have a flat top, we got a problem. You guys know I continually say we are always looking for a flat top. And I want to shout out to all the VIP all the members, anyone who is joining. I want to shout out to Nick. I talked to you the other day, brother. Looking forward to you upgrading this weekend. We want to put you in the back. It's going to be good, brother. We're excited about having you in the back. What we found was the following. We found this today. Very crucial update in terms of the specifics here. Now, you all know that we will use a specific preceding hitch. Okay, now, relying on the hourly, I'm going to preface this. I'll not warning, but just stated with all due respect and caution, right? Looking at any specific hitch, and I say all due caution in terms of over-relying on the hourly. Sometimes they're clean, guys. The hourly commands many times in terms of targets. You know that in terms of targets. Sometimes the hourly lines, that's all she got, right? That's all she's got. The hourly line chart is the boss in terms of some targets. You guys know that for Bitcoin. That's what she likes to do. In terms of this specific area right in here, do you see this specific move right here? Because we're looking for a flat top. And as we hunt that flat top, you'll see that area, boom, nice hitch. It's there for a reason, okay? As we would look at the specifics here, I hope you guys are having a rocking and rolling good weekend. Yo, yeah, what's up? VIP weekend. We've been having good ones. Last weekend, we got so spoiled, guys. We got a 15% to the downside day. If every weekend we're like that, guys, nobody would have a job other than trading. I guarantee you, in this group, everybody would be just chilling. It's like, we're going to be at the beach. Got some, some errands to run. And it's like, hold on, why is that blonde chick, she goes on every errand with you? Like, that's my errand, man. That's you can be chilling at the beach and running your errands all day long, right? If every single, I can tell you guys, if every single weekend, if you had trading opportunities like 15% moves, you'd be like, yeah, you'd be chilling, guys. You'd be chilling. So we take what we get when we can get it in terms of the market action. And shout out to all the VIP. And that's not that's just a fun running summer statement there. We hope everybody's having a good time in terms of all the guys and gals in VIP. What's up? It's summertime, guys. Hope you're enjoying that beach, by the way. Level of resistance here in terms of framing this appropriate. You check this out. Boom. You see that hitch? That's a hidden gem right there. I'm telling you guys, that right there is a hidden gem. Boom. You have got to pay attention to that. Now, aside, if you just tuned in, we talked about the inverse head and shoulders. What do you need for the inverse head and shoulders? You need some volume, guys. You need some volume. Where are you at on volume? Ba-boom. Through the floor, guys. So we're holding on here. We are just pushing. We know the pattern framework in the back that we're actually stepping up slowly through. You guys know this. We have, and I don't talk about fans too frequently, but you guys understand the fan framework here is still on. As you look at this right side, it's just kind of flailing this far. As long as this volume profile continues to descend, we are in a problem, guys. We have a problem in terms of moving to the upside. You know that has been an issue. As we've looked at the momentum in the back for MACD, et cetera, on Bitcoin, the issue has been some inconsistency on the momentum. You guys know this, but this specific area, if you have one thing right now to really update your chart on, is the following. Boom, on the hourly time frame. And again, that warning, just telling you, the hourly time frame is going to have to dominate over the 4-hourly and dominate over the daily. Okay. We'll trade it. I'll tell you that. We'll trade it. If aside from the volume, this is where we're at, guys. If aside from the diminishing volume, boom, right, which guys, inverse head and shoulder particularly is a pattern that requires volume, boom. Not like, guys, and not as much so for the regular head and shoulders. Just to let you know, not so much so for the regular head and shoulders, particularly for the inverse head and shoulders. You guys know this. That is a particular element of the inverse head and shoulders, and we need buying pressure, okay, because it is a reversal, period. It's a reversal, guys. So looking at the preceding inverse head and shoulders, and I'm bringing this all up for a reason. I don't want to change patterns. The market tells us what to focus on almost every time, guys. Almost every single time the market tells us what to focus on. I'm going to get into the micro and tell you exactly why I'm focused on inverse head and shoulders. But the preceding level here in at around 30,000, what happened? Beautiful inverse head and shoulders. And we got a punk out here. Boom, boom. Yep. We got completely punked out here. What was going on with our volume? To the downside, guys, just diminishing volume, nothing coming in, zero volume coming in, and we got a failed pattern. Boom, right? So these could be dangerous if you're not trading them well. We had an ascending triangle today that was very tough. A lot of volatility in the market, guys. A lot of volatility. Again, here we have descending volume. Big time, guys. This has got to pick up. It's a reversal pattern. So buyers have to step into the mix, boom, to push price up. It's that simple. However, it's just when we look at the volume, you guys see this. This is, if we go to the daily, looking at the daily, it's just we're just falling off the cliff in terms of volume. It would just take a nice push here, guys, in terms of the volume, but it's required, particularly required for the inverse head and shoulders. It's a sign, guys. It's a reversal to the upside. We don't get that without the volume. We just don't. But sometimes, guys, many times, it's the start of a bull run. That's the context that the New York Institute of Finance puts it in. How are you going to have the initiation of bullish activity with no buying? You know, it begs the question, doesn't it? So in terms of the inverse head and shoulders, you guys have gotten that. You see that. Now in terms of this near flat top, this is the one element that I think that slowly grinding in a slow and grinding fashion we're looking at here with a near flat top, because we've been hunting all of the time frames. You guys know this. We've been hunting all the time frames looking for that flat top. The best that we have is right now with where we've settled this level of resistance, and it's somewhat of an exciting time for Bitcoin. I'm going to tell you guys, it's somewhat of an exciting time for Bitcoin, because we are being, with a caveat and exception, what would we say? We have pushed in terms of this level of support. That's the unexciting part. But the notion that even if we were to lift this level of support in this direction, and guys, the constriction in this zone, we like constrictions, right? Anytime we see a constriction, oftentimes if we see a constriction in a EMA band, right, constriction in terms of actual patterning, etc., can we force price to really get out and move? Boom. So this would be I'd say that the foremost pattern for us to focus on right now would be the specific line of resistance on the 1 hourly. Please pay attention. This specific line is not on any other chart. You're not going to find a top that is this relatively flat. Now, when we look at when I say we need a flat top, you guys know, do we ever need a flat top on an ascending triangle? Buyers are extremely, extremely picky, guys, and extremely sensitive in terms of the notion of whether or not we have a flat top. The good traders, they don't make exceptions, guys. It's got to be flat. I'm going to tell you, if there's an angle to it, they'll trade it like a wedge. Guys, you guys got this. Or they'll try and form it into a symmetrical triangulation. They'll try and do something else. Now, the reason I'm dogging, or I'm covering, and we're covering for VIP, the inverse head and shoulders, is because the market doesn't make mistakes. I'm going to tell you that first of all. When you notice on the micro, when you dig into like the 1 minute, the 3 minute, the 5 minute, and you see an inverse head and shoulders here, boom, that just completes, bam, to the upside. Yeah, there we go. This works. This works. Now let's analyze this, because this is the benefit of working on the micro, right? We see a pattern pop up and it's like, hold on. We got an inverse head and shoulder here. Boom, perfect to the upside. That's what we need. This is what we need. You see the spike in volume here. Boom, boom, right? So this is a great example as we're looking at the macro, trying to fit in our next, our strongest trade and the alternatives. I'll say that in terms of, let's say we have plan A, then B, then C. Okay, we have the alternative probabilities in terms of how those trades would work out, or maybe a cover trade, kind of an insurance or hedge trade. You guys, I think have plenty of strategy. But as we would look at that inverse head and shoulders there, we are reminded on the macro. And guys, if you don't know the sequence, and I say this with all sincerity, if you don't understand the sequence between what the market is showing you on the micro and what's happening on the macro, if you can't use, guys, the what we say, kind of the evolution or the transitional framework of the micro, okay, if you can't use the patterns that it's giving you to re-wake up your mind or alert you to other possibilities, or guys, to practice even trading or researching, and you guys know this, VIP, you know this, right? If you see a new pattern on the micro and it's like, wait, that's on the macro as well. Like, I don't even know that pattern well. What do I need to read up on that pattern? Period, guys. The market's very, very astute. It's very keen on presenting you patterns that you currently have in play, inverse head and shoulders, right? On the macro, yes, guys, on the big picture, then yes, boom, providing you with a perfect example of said pattern on the micro, boom, boom, and allowing you to see what the elements are in terms of, let's say, volume, the construction details, the elements, allowing you to say, maybe it's time for you to really go research the inverse head and shoulders. Like, this one just worked. We haven't had one work in a while. So it's been a good time for VIP in the back. You guys know this is a good time for us to review the requirements for inverse head and shoulders and to make sure, let's see what we have here, to make sure continuously buffering. Oh, that's not good. Is it continuously buffering? That's not good. That should not be happening. I'm not showing any buffering on my end. Hey, what's going on? Seems fixed now. Okay. Well, yeah, no glitches here. Let me put that here. Let me put no glitches. Let me put that in the back for Torque. No glitches here. Yeah, we have a clean stream. Thus far, everything is going well. So, yeah, everything's going great. So, let me know if you're having any glitches. So, the micro to the macro, you saw the volume come in. Boom. Right, that move to the upside. So, we are going to literally need that to occur on the daily, guys. It's going to need to happen. We're going to need to see just a small, just an uptick. Boom. We've been decreasing. So that is essentially what I wanted to come with you guys tonight. I wanted to make sure that you're aware of that. We also talked about the top level resistance from that hourly time frame. Okay, the hourly time frame, I think that specific hitch in this zone with that level of resistance drawn across. We use these hitches, guys, and they've been phenomenally important on the macro, guys, on the macro up to the daily precedingly. It's not the you have to trade. I want to tell you guys, you have to trade to understand the implications of finding an important line that's kind of hidden from the rest of the traders who let's say aren't tuned in, aren't really trading. So this is an important line there, to the extent that we are still within a formulation here and pushing along said line of resistance. The hourly is the most forgiving right now in terms of let's say still continuing to be expressive of a bullish notion. What it would take is and we will also, guys, that we have some variability along this top line. You guys know this top line of resistance here. You can schedule this in from these preceding levels here, and you'll just know that to the extent that we have broken out, not broken out, we have variability along this level as well. So the cleanest and the most difficult, I'll say that the most difficult and I'd say the most aggressive for us to surpass in terms of a level of resistance is the specific hourly. Okay, I would look at the hourly versus, and I've looked at them. We've all looked at them in the back, but we know from the 4 hourly to the other lower time frames, this specific level across the top, this is as aggressive as we can get in terms of needing to surpass this top level on the. Let's look at this on that hourly time frame. So whatever time frame you're on, thinking we're out, up, and clear of this top level, make sure that you've looked at the hourly on your desktop, okay, or your phone, whatever it is. We would. Encourage you guys to do that like now. You'll see here let's go for instance on the 4 hourly. Let's just look at the 4 hourly. Okay, on the 4 hourly, very simply put, what I'm just describing here, put into words, let's take the words and put it into the picture here. And in terms of this, what I'll state is this specific line here, this downward trajectory resistance here is significantly up, out, over, no problem, boom, we're ready to roll right out of this triangulated feature without a doubt. We're ready to get out. We are out and up, guys, out of resistance. The issue is, again, step back into the hourly. Please look at the hourly on this, because the hourly has a less forgiving, kind of a more stringent level of resistance that we haven't broken out of yet. And this hourly line actually contradicts. It actually is in opposition to also the candle wicks. So on the different time frames. So this is the least forgiving line on the hourly. Again, now that you see it, you understand. But on the 4 hourly, we're clear. On the hourly, we are not. So that's a crucial component there. For anyone who's not VIP, we welcome you to join our trade group. We have the best, guys. rocking and rolling. If you guys don't know how to set up your trades in terms of leverage, etc., we are excited to bring that to you in 2022. We are building our group, and guys, we're building it, but it's rocking and rolling right now. Cool guys. Group of guys and gals that want to beat the market, bottom line. So level of resistance across the top, carry this line over from the hourly. I like the hourly right now, guys. Very important. Okay, this level of resistance here internally with that specific hitch in here, you're not going to find that, guys. As you can tell you, if you're not watching right now, if you're not plugged in right now, you're not going to find this. The average retail trader is not going to find that specific hitch. You see this hitch on the hourly? That's an important hitch. Boom. It's hooking into something, guys. Boom. It's hooking into a really nice level of resistance across the top. Okay, that's what it's hooking into. A really nice level of resistance. Boom, boom, boom. Across the top. You see hit 1, 2, 3. So that's an important line. These lines right here on the hourly, 1 and 2, are going to be your most important lines to the upside in terms of defining your specific, in terms of expressing or defining your the maximum that needs to be broken out of. What is that? What, you know, where technically have we achieved a breakout of any triangulation? And if we were to call it the symmetrical, the inverse pennant, etc., bear pennant, etc., someone has said bear pennant. That was pretty much on the list yesterday in terms of what we're looking at right now. Okay, the inverse. When I bring that up, people tune out generally. But man, what a cool video yesterday in terms of that Elliott wave analysis. Gee whiz, guys, that London bull market, gold market, that London gold market. In terms of that, that's just, guys, if you're not tuned into that Elliott wave feature, I don't know, guys. That's cool stuff. That's top-notch TA. I really like those charts, and it would indicate to us, honestly, if there's a repeat of that previous chart, boom, that we do have room to go down. Would it be to, ultimately, guys, would we have room to go down to the 786 Fibonacci, right? And this is we could do this real quickly. This is the daily chart. So we're on the daily chart right now. Okay, that's the daily. Let's do this. Let's invert the chart. And I'll walk you through this because I tried to go through it as quickly as I could yesterday, guys, in terms of that video. But just to walk you through the chart very quickly. And I just threw the phone to the ground. That's not good. Hold on 1 second. Just yanked the phone out of the computer. Apologize for that. Let's go through the specifics here. Let's go through that we're on the daily inverted chart. Okay? Let's clean all this up, and I want you all to see and appreciate in a way that you guys can just it's standard if you guys work a lot with charts, right? If you see a lot of you'll see patterns repeat. You'll see charts that are no strangers, right, to the market participants. This is definitely one as you paste in. And guys, understand you can always cut and paste anything into your trading view. Cool thing for VIP, check this out. You can paste into trading view. Also, a very cool thing that you can do is, if you so choose, you can actually draw over, or you can mark over the specific image as you were to let's say work with your technicals as you were to let's see what we have here. Boom. Looking at this, this is a nice feature of trading view which isn't discussed very frequently. So looking at the Elliott wave function here, what the purpose here is to go through. This is the daily PM. What is this? Gold market, gold bullion. What is this? 76.78. But I'll tell you, this is a very important chart. It's regarded as the example. It's the example by Elliott wave. Period. This specific chart, the gold chart, is the example, right, for this dual construction here. Now, the importance of, let's just cover this. We have some time to talk, time to kind of go over it and relax. Any kind of issues, maybe it can refresh a second time. Let's go through the parallel channel. Let's look at this parallel channel from the downside here, and let me go ahead and draw this up to the same caliber. Let's equate these two images here, and to look at this first level. Now, this is the bear flag. You guys know that's the bear flag. We're on the daily chart. Very important, right? As we look at this secondary channel here, boom. Now, this is where things get interesting, and I will agree with one thing on this chart, and I'm glad that you guys are watching right now because this is important, what I'm about to say. Please pay attention, okay? On the specific top line threshold, bringing up the level of support to the resistance, you'll see very clearly, it's not in question, guys. As you would look at the similarity here, there's not a question as to the overlay. There's not a question as to the wave pattern formation. As you would even look at the specifics in terms of the actual construction, it's so par on par. It's not. There's no one's going to argue with it. Okay. The only question that we get into is we look at the second 1, 2, 3, 4, and whether or not we have an extended 5. The question is, are we here? And I appreciate you guys looking at a big screen TV right now. Are we in this zone with the drop down feature? Just guys, it's begging the question: do we have an extended 5th? Okay, and quite cool in terms of trading view, huh? Very sophisticated program, isn't it? In terms of allowing you to draw over issues that have already been guys that have just been copied and pasted. Let's do this real quickly. Let me change back the color here, and I'm going to demonstrate right now what the catch is. There's a catch. Okay, this is an important catch too. I'm glad we caught it. We have it now. In terms of the top level resistance, I mean, it looks like, you have to say, guys, it looks like, and this is going to be the question with Bitcoin 2022, or at least right now, guys, the immediate question. You see this underperformance here. This is just so cool, guys. Look at this. This specific underperformance in the middle of the channel, right? Now, we have to look at this. Guys, you'll like this. Check it out. Underperformance, then that wave 3, 4. Underperformance, then that wave 3, 4. Then we boom up to that line. Okay, then we boom up to that line. However, if we're straight along this specific line in the top, there's no question, right? We're fulfilled, right? We're in line. We're ready to. We have fulfilled the channel, right? Unless you go into the 4 hourly. Pay attention to this, guys. Unless you go into the 4 hourly, we start to see some differences in terms of this top line threshold. Now, and unless you go into, this is going to be the real kicker here. As you look at BTC USDT, right? As you look at Tether, right? It looks like we're just about maxed out. It looks like we're perfectly in line with this top line. It would be the bottom support of this channel, right? As you would look at the overlay here, I mean, that's all she wrote, right? That's all she wrote. However, if we go from Tether, okay, if we go from Tether and we decide, well, wait, hold on, something happened with the DPEG, something happened with the price of Bitcoin. Wait, I remember something else. Yeah, okay, if we go to USD instead of Tether, this is where things get interesting. This is where we have a differential here. Now let's go ahead and put this this chart back up so that we can see it on the USD as opposed to the Tether, because here it looks like we've got a lot of room. Here it looks like we have got a whole lot of room to go ahead. If we were to look at this specific channel formation, you see the dig that specific hit, that was the original hit under the golden pocket, if you guys will recall that. Okay, so looking at the, let's do this. Let's clean up all of this. Let me clean up everything except for, let me paste this back. And I want to really show you on the USD chart versus the Tether chart, BTC USD versus Tether. Looking at this framework, we have quite a ways to go before, and this is going to be the crux, guys. You see how much room we still have to get to the top of this channel, right? Big dig. You guys recall that. Just to reframe, we're inverted right now, but I want to go over this because the USD versus USDT chart, right? We still have all this room down to this level, guys. Very important as we look at that solid Elliott wave construction, and it's guys, to the extent that we could have, I mean, I'm going to tell you guys, to the extent we could have predicted, right, the USDT versus USD, we could have accounted for it. I'll tell you, we traded it. It was still correlated. USD and USDT was still correlated. We could still make the same trades. There just wasn't the same level of velocity in the price changes. So as we look at this framework here, just crucially important, and to put that, I'd say that final caveat into the equation, or that final kind of disclaimer, in terms of this is, it turns into a discussion or an argument about USD versus USDT. Have we completed this specific Elliott wave cycle or not? Is there still room left in the channel, boom, to the upside here or not? You guys see, the answer lies in whether or not we're going to respect BTC USD, boom, boom, in which case we're perfectly in this zone. You guys see this, in which if the USD chart governs, look at this on the daily, we're perfectly right here, guys. Perfectly. Look at this. You guys see, it's just, you couldn't literally photocopy it or draw it any better. Now, you see that, guys. So to the extent that, yes, that the USD chart's going to govern, then, yeah, Houston, we have a problem. Period. You see that? It's just, that's something else, guys. That's solid. That's a solid framework to provide an analytic in terms of TA. It's a nice chart, guys. And you have the copy of that in the back. VIP, you guys have that. Let me rewind again and show, whereas we would have room to the downside here, let's reframe to USDT. Let's just make sure that we understand USDT. No, you're going to see this is like, no, we're right on that line already. We've already reached and fulfilled that fifth wave. So very interesting. Stay plugged in, guys, to the micro. But you see how perfect that was, guys, in terms of that. And I know you appreciate that. When we find charts that are beyond similar, you know that, guys, it's a little more than just a similarity. I don't understand how that can't capture the attention of people who are interested in technical analysis. Honestly, the quick answer loses. I'm going to tell you guys every time. If you ever, you know people in TA, you know traders who literally it's like they got to have an answer in a minute or 2 minutes. They got to move on. They need to trade. Really, huh? Those guys are losing. I'm telling you, they're losing. When you can't slow down, I'm going to tell you the same guys, they're unable. Always, guys, they're unable to be patient. They're unable to be disciplined in their trades. They're unable to wait and find a really beautiful, nice pattern to actually allocate their capital to. When you can't slow down and you need the answer in 10 seconds and everything's overly, you know this, guys, it's some of it may be age. I don't know. The average crypto investor is age X, Y, or Z, right? Some of it may just be, patience or lack thereof due to circumstances like that. But the right answer involves analysis, technical analysis, right? So you have to be analytical. The analysis that goes by, like the like the wind. You guys, they're not analyzing anything. I don't even think they're really trading. So congratulations to VIP who can muscle that up and who appreciate that in terms of the dynamics that we presented. So cool stuff. Cool stuff. So let's see what we got here. Now this just looks, guys, it's a nice top. It's flat enough. I'm going to say that, guys. It's flat enough. What's also flat enough? And you guys know, in terms of contradictions, this downside level, this downside level of support is within tolerance, guys. Very close to being flat as well. So we have a level of support, flat support, indicative that the sellers are in control. Bottom line, I'm going to tell you, we have a flat top within threshold on that hourly. I'll tell you, the buyers have continued and have rematched that specific level. So I'm going to take that as a bullish sign. Okay, just to reframe, we do need some volume. I'm going to say we need some volume. And you'll catch the volume, guys. I'll tell you, you will catch the volume if you're actively trading, but it's not something that you can necessarily just say as a matter of fact without setting, you guys know this, without setting your alerts, without staying tuned in, plugged in, making sure that you have your alarm feature set. Blast it through the stereo. Literally, huh? Just literally blast it through the stereo. Plug the computer into the stereo and have it wake you up or alert you if you're anywhere in the house, etc., etc. Make sure you got that going on. So alerts are set. We have Fibonacci's below. You will catch volume on the lower time frames. You'll see price move. It's not going to be a mystery. However, you don't want to necessarily miss it. I'll say VIP already have. Many of you guys already have positions from underlying entries. We have a lot of those guys in the group, so that's an exciting component. Obviously, that's ideal. And if you don't have a component yet, I'll just tell you, you don't have let's say a position yet. Are you trading? How many trades did VIP have today? Plenty of trades. Shout out to Freddie, to Torque, to Venus. Leo, I know you're getting ready, brother. Can't wait till you start to hit the 100 rounds. It's going to be nice. And really what I wanted to focus on tonight, guys, was the following. Boom. This specific volume feature. Hugely important. We need for the inverse head and shoulders, the specific volume feature. As the price action or the patterns have developed, we have done our best to develop with them. And at the same time, I haven't wanted to over-focus on anything that has been a continual, I'd say, disappointment in the market, right? Like an inverse head and shoulders pattern. We just had one in this zone, preceding zone 30,000. To remind, it failed, okay? This has gotten our distinct attention because on the 3-minute, 5-minute, 1-minute time frame, etc., we just had a really nice completion of an inverse head and shoulders. So, yeah, it's got our attention. That's the way the market can wake you up a little and say, hey, you know, we're in an inverse head and shoulders. These are the requirements, right? Just very well done. Just boom, nice move to the upside. And you'll just see that volume coming in here. Boom, just take that, put it in the toolkit, and guys, let's get this. Let's go. We need BTC. Let's do the target real quickly. In terms of that, let's make sure everyone knows how to measure the target on an inverse head and shoulders. Now we have the neckline. You guys know this neckline, okay? Now the neckline is the pivot between the two pivots, essentially between the left shoulder and the right shoulder and the head. Okay. Now, if you're measuring from the head to the neckline, okay, from pivot to pivot, that's the trend line from pivot to pivot, right? That's going to be the neckline. Essentially, that's going to be the right shoulder, left shoulder, neckline, head, inverse head and shoulders, right? So what we're going to do is just measure from the head, boom, to the neckline. And it's a very precise measurement, just so that you know that it's not guesswork. It's not, well, you know, maybe this is the right way, maybe this is not the right way. No, guys, this is the way to measure a specific head and shoulders, and there's a specific application that you'll that you will apply this amplitude move to. You will stack it, boom, at the point of breakout on the neckline. Period. That's it. You never, guys, you do not do this. You do not drop it underneath, ever, guys. You don't. All right, I'm just telling you in terms of the actual, because some people are confused on this. And not at all. You don't drop this into here. I mean, you wind up with the wrong head and shoulder. You're down. No, guys, you don't do that at all. You do it on the neckline, okay? On the point of breakout from the neckline. So looking at the potential here, and this is why we're not excited about this having pushed, right? The last, really, as we look at this the last 2 days, right now, this is on a lower time frame, so we have a specific breakout here. I'd look at we'll look at the hourly in terms of that. But looking at this, guys, we could have a move to 25,644 indicated directly as a target, 21%, 21.88%, right? Seems a bit ambitious because she has let us down so frequently. She just has, okay? Recently, she's let the bulls down with a ton of volatility in the mix as well. Now, we have I'd say a complementary, to the extent that the ascending triangulation, complementary, okay? In terms of the ascending triangulation, we would look at the amplitude here. Right now, we just had a mean ascending triangulation. Ooh, guys, you know that on the turn of the day in and around just before, the ascending micro triangulation here was mean. She was mean. You guys know that, okay? What she did, and I'll bring this up, VIP, like, you betcha, if you traded that, I squeezed some blood out of that turnip. It was tough, guys. You know that. You had to have quick Jackie Chan hands, right? You had to be quick on the market. So the amplitude move here, we would expect this to be carried up over, and again, guys, over equivalent. The comparable would be that neckline. Now it's the level of resistance. Boom. To support. So that top level resistance would be on the ascending triangulation. Be prepared. Whew. If you guys traded the micro ascending triangulation, you have been changed. I'm going to tell you guys, you know this, you have been altered. I'm going to tell you that we still have this upside target though. We still have that 18%, so 18 to 20, 21, 22% in terms of the entirety of, let's say, and they're complementary because they're both bullish, right? So we'll just say 18 to 20% indicated by either the ascending triangulation or the inverse head and shoulder. I just tell you, if you traded that, and all the VIP who traded, you guys know, you're like, yeah, a little bit. You know, it's like that. It was slam dunk fest, just all, you know. I mean, literally just break the backboard, boom, kind of action on the lower time frame for the ascending triangulation. So to the extent that you guys traded that, just incorporate that into the macro, though, right? Never be afraid of the market. I always say that, never be afraid of the market. And in terms of this, we've been up along this level of resistance now. Let's just measure this out for well over 2 days. And it's nice to be back in this level. That's a very bullish sign. Very bullish sign. You guys know that? Irrespective of the specific volume profile, this is a very bullish sign to be holding price at that level of 21,500. Okay, I said that, and I've said it twice, and that's just the truth, to be holding at that level. We've been preceding at that level, 21,500, and it's just like the bulls continue to push that direction. Ascending triangles have been difficult amidst the retracement. Okay, they have been, guys, since 69,000 on the way down. Ascending triangles have been difficult, so just watch yourself. I know that a lot of you have great entries from lower entries, and that's exciting because you guys are already in the money. You have a little bit of a what's up? Is that Bill in the house? What's up? What's up, Bill? My man, what's up? VIP, what's going on, brother? Hope you're doing well. And let me go ahead and shout out in the chats to you. We'd love to hear from all of you guys in terms of how your trades are going. She's been a little slow. She spoiled us, hasn't she? Spoiled us. And I'll just tell you guys, the weekend isn't over. You guys know this. The weekend is not over because, guys, she hasn't let us down one weekend, has she? Like, last 2, 3, 4 weekends, she has been on it. So we are excited about the rest of the weekend. That's just the bottom line. I'm excited, Bill, that you're in the house. What's up, my man? And all VIP. Just the right group, huh? We're having a lot of fun. We're having a lot of fun, guys. We all have the pleasure of just hanging out together and trading, right? Tough group. Looking at Anthony up top there with his picture. Venus, what's up, girl? Venus in the house, California. So the ascending triangulation, the top is flat enough. I'm going to go ahead and say the top is flat enough. Okay, the contraindication and the difficulty that we have on this specific chart, to reframe this once again, to not be too excited, but guys, to not underplay the need for volume. Boom, has to come in. Looking at it now, the volume is pitiful. The volume is literally non-existent. I know it's the weekend. Okay, so we're gonna get we're gonna wait till Monday morning, guys. We need volume. Okay, we're at the crux of this apex in a constricted zone. So I understand that that statement. Well, it's the weekend. There's no volume, etc. Man, we've had huge moves on the weekends, guys. Huge moves on the weekends, like unbelievably strong moves on the weekends. Let's look at. Let me dial back into this. I want to see this. When was this? What is this here? This was 4, 5. Where are we at? We're at 7, 10. Just looking at the different days here. Oh, yeah. We need volume on the weekends, huh? We can't get volume on the weekends. Everything's closed. Oh, whatever, guys. This move down here, boom. Yeah, that's some volume, guys. That's called volume on the weekends, right? A move down of 15%. Yeah, don't. The market's closed on the weekends. Oh, yeah, whatever, guys. Come on. That was huge move. Boom. We have huge moves all the time on the weekends. You guys know this. That's a big red volume indicator. Boom. So we're ready to move. Don't discount the weekend like that. Make sure that you're ready to trade. That's some of our best trades in VIP are part of our weekend trade, our trade approach. So a little bit of a flat top here on the 30-minute, some different time frames up and above that you guys will want to watch out for, particularly on the 30-minute. I always tell you guys, 30-minute can be your friend or your foe. You guys know this, right? Look at this. Just nice flat top just set up and above that we've forgotten about for about a week, and that's at that level of, let me zoom in here just a little bit. Let me relax and zoom in about 22.5. So this level at about 21.5, we've got the 22.5 up and above, and another level of resistance that may want to act as a stopping feature, guys, at about a 5.25% to the upside, about $1,000. Tap $1,000 onto the price right now. Tack $1,000 onto it. So I'd pay attention to that for sure. If you traded, this is the benefit. You guys see the benefit right now of trading on the lower time frames. You guys see that? Huge benefit of trading on the lower time frames, because everyone was just throttled, absolutely fully throttled on the ascending triangulation that we were trading in this zone. Boom, boom, boom. Just huge levels of volatility. Nice job hitting your target, by the way, for any VIP that were in the back. Anytime we hit a target, guys, I'm excited. I'm really excited when we come down and we hit a target. I know it's a downside target, but the fact is you're hitting it. We're hitting it. It's another target that gets hit. Boom. We just hit that before we started streaming. One of the reasons I wanted to come and stream, aside from all the other TA, all the other details we went over, the need for volume on the inverse head and shoulders, particularly particularly on the inverse head and shoulders. It's a reversal to the upside. We need the buyers to come in. You guys understand that, right? So looking, let's take a look. Boom, 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 boom. Where are we at? Boom. Where's my, whenever this gets rearranged, come here, you triangle. There we go. In terms of the specific features here, we do have a descending wedge feature now. Okay, now we've had a few of these. Okay, we had an internal wedge feature here as well. And as you guys get better at spotting these and applying the specific targeting practice, there's some additional details that we'll go over at some point in terms of the targeting. I don't want to lay on too much too quickly. I don't want anyone to get behind or anything like that. I want it to be comprehensible in terms of failure of a wedge. Typically, there is a possibility for recoup into that wedge, without a doubt. You guys know that. I'll leave it at that for now, and I'll let you allow you guys to watch the trade wedge tactics, Bitcoin spike wedge tactics. It's a good one, guys. It's something you're going to want to watch. But this specific feature in here, boom, to the downside, which is important. We're along this level of resistance across the top. So I'm sure, guys, that we're going to trade this move well. Bam. You guys have already been trading great today. And that's just what I look forward to, guys, is the bottom line. We get to have fun. We get to trade. You guys working on your consistency. You're being profitable. That's the idea, right? As we look at 2022, how to grow into really, like, what are we building? It's just numbers of traders? No, we're building skill sets, right? We're building the abilities on an individual basis to compete with pro traders, to outdo the pros. Period. No apologies. No qualification on the statement. Oh, I mean this or that or not. Zero apology for that statement, so that you individually can compete with a pro trader. That's it. Now, if pro trader has $100,000 or $200,000 or a $2 million or $5 million system that he's using for advanced screening or advanced trades that he may put together, you know what I'm talking about. I want the pro trader to go back to his little beach cottage right on the weekend, him to dial up his computer just like you and plug in, get on the exchange, and I want you to beat him. Okay, that's the bottom line, and you can. All right, it can get done. All right, you have access to the same information. You just do. If he has tricks of the trades, like I say, the system is the one thing I would worry about in terms of a pro trader. Just like, a hedge fund with a $15 million computer server that's cross exchange, intra and inter exchange. Right, hedge fund that's literally, with the that level. Understand that, hey, you got yourself an Alienware laptop or desktop or 3 screens. I'm not talking about beating the hedge fund and all their desks at the hedge fund. I'm talking about you competing in a one-on-one style format, being at that top 1% of the market, and that's doable, guys. But it takes a lot of work. You guys know that it takes a lot of work, and working on that consistency first and foremost is the number one thing to do. So looking at the volume, going to be crucial. We'll be checking that out. Want to shout out just to Jay. What's up, Jay Mack? I see you right there. Anyone else I haven't shouted out to every now and then? I just look up there and see, like, hey, Kent, what's up? My man, Kent, what's up? Now, anyone who I have not gone through hedge or leverage, hedge, guys, a hedge trade or leverage, I want to encourage you that this week is the week. Amos, my man, I see you now. And we want you on that pathway. The pathway is the following. It's a milestone goal set: 100% trade, a 200% trade, a 500% trade, and a 1,000% trade. I need to update some of these scrolling across the top because I know that you all can indeed, and some of you have achieved more than what we're showing even there. But guys, higher returns. And some of you aren't used to holding something as long as it would take to get a 500 or 1,000% return. So it's going to stretch you. It's going to force you to work on the duration of your trade. Otherwise, you wouldn't do that. So it's a critical step forward, as you say, a pathway into what? That sounds weird. It's a goal. It's for what? Well, for some of you, it's going to force you to hold a position when you're used to trading back and forth very quickly. Nothing wrong with that, guys. But for some of you, you need to go through the process of holding a position for a week, maybe 3 days, maybe whatever that would be. Day traders are infamous for not holding a bag of anything, right? It's the day's over. Their trades are closed, period. So for some of you, it's going to stretch you into just a little bit. We're not holders at all. But to get to that 500% trade, to get to that 1000% trade. Very important. Now, on a day like this with 15% down, you don't need to hold it overnight. That's the other thing. You can still day trade. You guys know day trading comes from the idea that at the end of the day you close all your positions are closed. Okay, that's what a day trader is. That's where the expression comes from. So to the extent that we have a boom, a move down like this, move up, boom like this, certain moves will accommodate a 10x trade in a day. You guys will hit it. You guys are going to hit it. The VIP are going to hit it. That's part of that pathway, that milestone. You're going to have to hit it on 125x, right? And that's the 100 rounds. Once we get through the 100 rounds and you guys get that consistency rolling, we're gonna see what all comes to. I talked to Venus for a little bit about that today. Excited about Venus. We're looking forward to who all knows what can happen in 2022. Good talk today, Venus. Rock and roll. Super cool girl. Really excited that she's VIP. And Sean, I see your picture right now. Hope you're doing well. Hope you're feeling great, bud. And what I'll say, guys, we'll let you go now. This is looking extremely strong to be across this specific flat top resistance. Okay, it's just looking bullish to me, guys. And if it's looking bullish to me, I just say the one thing we need is volume. Okay, we need volume, particularly on that inverse head and shoulders. And I'm excited again that we traded that small ascending triangle. It was vicious. You had to take. I'm telling you, you had to take. She was up and out. I said there was a breakout, and that breakout was the takeout. That was it. You breakout, takeout. You break to the upside, you take it, or it's going to slam you, right? So be prepared for some vicious price action, and I'll tell you to be prepared for this specific level up and above that 22. Essentially 22.5 to 22.8 from this 21.5. So we got 21.5 and about 22.5 and around that zone. Just pay attention to it, guys. It's that next level up, that next hurdle for us to get up and above. But it's exciting to look at the price action right now. You guys have to admit it's looking like she definitely wants to do something. All right, it looks like that without a doubt that buyers are testing this level strongly enough, guys. I'm just gonna say. And I have to, I don't want to warn, but I have to remind at least 4 hourly. We have to do this, guys. I have to go through this. Ascending line of resistance. You guys know this is where things can get a little bit volatile and particularly unpredictable. Okay, because the 4 hourly is showing us with a bit more of a slant. You see a bit more of an angle to the upside. The more angled that we get, the more it's indicative of a rising wedge. A bearish feature, right? We still have the inverse head and shoulders, but look how much the head and shoulders has just trailed off here. We have the left shoulder, the head, the right shoulder looking bullish. Look at that central head portion. Looks very bullish, guys, up through this zone until we're just dragging here along the line of resistance. So, yes, the inverse head and shoulders is still there. Volume, we need volume. Green, we got to have buyers come into the mix. They can do that on the weekend, I promise. On the daily, looking at the daily as well, once again, we have an ascending line of resistance. We don't have that flat top, okay? So we're looking at a few features on the 4 hourly and the daily. We need the hourly to trump. And normally, guys, the larger time frames are going to trump. So that's the counterintuitive aspect and component of what you're looking at right now with Bitcoin. Don't confuse it, okay? Normally, the daily and the 4 hourly are stronger time frames. You know this. If you're going to pick a time frame, you're going to pick the 4 hourly or the daily, period, right? And as of right now, we have the hourly, the smaller time frame, being indicative of some more bullish expressions that are more favorable in terms of a near flat top on, if we're going with and I'm not opposed to the inverse head and shoulders. I'm just going to tell you guys, I'm not opposed to it, but the overall market has been extremely opposed to them. It's not me. It's not a preference. Okay, but before everyone gets all psyched up, inverse head and shoulders around the 30,000, this was brutal. People getting involved in this area right here, throwing in heavy positions right in here, really looking for a repeat of the amplitude from the head to the neckline. Guys, we have to bring it to context. Boom, we were expecting a nice throttle to the upside. Bam, look at the level of underperformance here. So this is the story. This is not my opinion. 10%. We're off by 10% to the upside. We failed $3,000 to the upside. So we got a little glitch here. That's aggressive pricing, guys. That's an aggressive pattern. That's that qualifies as a as a difficult pattern that you going to have to pay attention to that, guys. You know this. It's not to say that they've been difficult. It's not to ignore them. There's some price action surrounding them. They've just been tough. So if we can accompany the Emperor's Head and Shoulders with a specific ascending triangulation, all the better. The fact that we're having to hunt and pick through the hourly as opposed to and shield away from implications on the 4 hourly, implications on the daily, it's just not that slam dunk, or it's not the Jordan dunk from the free throw line. It's like, oh, everybody loves that, man. Everybody, they look at that all day long. It's perfect, right? This is kind of like, oh, it's just we lack confirmation. We just do. We lack confirmation. So lower entries govern. When I talk to people about Bitcoin, guys, traders, extremes pay off. You guys know that. So to the extent that we're building up, we're grinding, we're working along consolidation here, just understand that your bullish framework is the hourly. Make sure that you understand that in the context of the daily and 4 hourly kind of needing to be dismissed a bit, which is a tough argument to make. And we're still trading. I want to let you guys know that, but never overexposed at a higher price. You guys know that. And I'm going to remind you, if you're trading on leverage, make sure, guys, this is a VIP way to be. I'll repeat what I hear them say, what we say all the time, guys, is make sure that you have 100 times your trade. 100 times your trade in, guys, a separate amount of money that's comfortably expendable. If you do that, you're going to be just fine. And I mean that by comfortably expendable. Okay? 100 times your trade, you have apart from your trade, and it's that amount of money is comfortably expendable. You understand that, guys? That's like, if you're not in that frame of mind, if you're not trading like that right now, I tell you, I talk to a lot of people who want to, they want to get in the position. Listen to me, guys. This is important for VIP and everyone. Please listen to this. I mean this with a lot of sincerity. As we're looking at the patterns, as you're working in the market, as you're upping your trade game, people will come to me and they'll say, "Well, I'm working on becoming VIP. I keep losing, or I keep this or that. I'm having trouble with my trades." Well, guys, you have it backwards. Join VIP. Get into the trade group. Work on your technicals. Lighten your load. People who can't trade well yet, and there's no shame in that, guys. You haven't had the exposure for the number of years that a lot of the traders have. There's no shame in that. But when you're using amounts of money that you can't afford to lose, while you don't have the skill set to trade, it makes no sense. And when I hear this, my heart pours out to them. I just got to say, I reach out to them. I'm just like, man, and I mean it because I care about the guys, the crypto space. I don't want people to be losing money and then them thinking, well, once I get to that level and I'm successful, then I'm going to join VIP. No. You're losing your ability to progress essentially by not being a part of the group, guys. And I'm just going to tell you, because we focus on the industry standards. We just do, right? Aside from buy it, support, sell it, resistance, trade your patterns, hit your targets, New York Institute of Finance, you're not going to find that, guys. You're not, I mean, you have it now, but the guys, just lighten your load. Make sure you have 100 times whatever your current trade amount is, aside from your trade, in comfortably expendable cash, please. Okay? And don't take the approach, I'm going to become a better trader, then I'm going to join the group. No. It's for people who want to beat the market, period. And if I hear one more person who wants to join the group, but they're losing money, and then they're going to get better, and then they're going to join the group. It's like, man, it's completely backwards. You gotta join the group, commit yourself to a process, increase your skill set, and that's how you get better. So I really wanted to bring that to your attention, just as from the heart, guys. I really mean that, and that's not that's as much as I can say, guys. That's the absolute truth. So, in terms of this, we'll be in the back. This is London with Bitcoin Spike. We're excited about the trades today. We're excited about the trades every day. Watch this level above. I'm just going to say right now, guys, how could you not say that this is bullish, except for the fact that we're just looking at the 1 hourly time frame? Dang it. You guys know this. Dang it. We are going to have to deal with the 4 hourly and the daily, the ramifications of such. That 4 hourly, particularly, guys, I just wish we could just erase this thing. Because that specific line here, I'm going to tell you, this contact pointed around 21,750. 21,750? That's mean, guys. This specific level contact here, 21,750, that's just a mean line, guys. Nobody wants to deal with that line on the 4 hourly, right? Can we pop it? Can we get up and over it? Well, we're gonna need to have that 1 hourly govern. I'm gonna say on the inverse head and shoulders, as we're out of that, we're going to need to see some volume. Without a doubt, we need to see some volume where we're currently literally in the desert. Boom. The well is dry. Boom. It's not because we're on the weekend. No, guys, it's not because we're on the weekend. We've had plenty of volume, right? On days not of the weekend. We've had big moves down. You guys know that and up on the weekends. Okay, so it's just we need that push, particularly on an inverse head and shoulders. It is required. It's just, they particularly note that on an inverse head and shoulders because it's a reversal pattern to the upside. It's indicative of buyers coming into the market, literally. That's the reason we would reverse. So without that, guys, it's going to be the crucial component as we look at the volume profile. Just pay attention to that in addition to that 4 hourly. That'd be the warning, the word of caution there. But it's just looking, as long as we look at the 1 hourly. I'm just going to go back to that again, but you guys know. And you guys know how to trade this. Don't be overexposed. Be prepared as well for. And the guys with, you guys know, the people that have, the traders that have Fibonacci targets below. Without a doubt, even on the 23.6, right? Anybody got targets? Anybody got orders parked at the 23.6? Come on, huh? Anybody want to get picked up on the 23.6? Because that'd be a slam dunk, huh? That'd be a nice dig down, wouldn't it? Yeah, if you get a little, sweet dig down to that 23.6, that'd be nice, guys. Don't you? And you'll love it. When you wake up some mornings, you're like, God, hit my target and boom, I'm up in the money. I'm up 40%. I'm up 30%. You guys know that's the best way to trade, guys. Buffett said, if you can't figure out a way to make money in your sleep, you'll be broke the rest of your life or working the rest of your life. That's one way. Fibonacci targets to the downside, 20,697. Let's see. It looks like that. Let me make sure this. Let's make sure on this. It's going to be 20,761, okay? 20,761. Measured, confirmed, that's it, 20,761. We'll have some interim features here as well. That'll be stepped up to this level. That'll be on the macro of the entirety of the range, 20,761. So that's on USDT, by the way. Okay? We'll talk to you guys soon. It's a blast knowing you guys. We're excited about trading. Let's go. This looks good, guys. It looks good. And I won't say anything other than park some orders, guys, at least one level below on the macro. See if you get picked up if she wants to get aggressive against you, right? Without a doubt, if you're in a long and you're in the money well, maybe you etch off a little bit of an insurance trade. Maybe you touch up a little bit of a hedge, right? Just a small short, right? You're in the money. You got a great position writing. Maybe you touch up just a small short. Something you wouldn't mind expiring if it blasted the roof, but something which could cover you in terms of locking in some profits. Most people will lighten up their long, right? They'll cash out their long. I'm the kind of guy sometimes. And I'll just say, if you have an underlying position in profit, guys, that's when the hedge, the insurance, right? Just buy you a little insurance, right? Get you a little short there. Just don't mind if she goes down, lock in that profit. So we'll talk to you guys soon, and I'll cut a video to the extent that we need to cover anything else. But it's been a great stream, and I appreciate you guys very much. We had a good day in the back, and I want to shout out to Bill. Thanks for being here. Ancient Thread, I think I hid you because this is a space just for VIP in terms of the chats, etc. We want to shout out to Torque, to Bill, to Freddie, to Leo. Shout out Leo, big Leo from Australia. And guys, those of you who are not in VIP yet, you have to join because we're having fun and we're trading. And I know who wants to be a good trader in 2022 because they are in our group. They are in our group, the people who really want to be a good trader. It's easy stuff. It's just easy. They join VIP. That's the bottom line. And the guys in VIP, they're like, yep, that's it. That's the bottom line. We differentiate ourselves from the rest of the crowd, guys. We're not Johnny-come-latelys in terms of who we are or whatnot. It's not, we don't copycat trades. We do our own TA. One thing I want to bring to your attention real quickly on the hourly is specifically we're going to look at this on the hourly real quickly, 200 exponential moving average. On the 4 hourly, as we look at potential interruptions, okay, because this preceding zone here, and I had reminded myself I wanted to get into this. The preceding move, and this will be important. Inverse head and shoulders, boom, up to the 50 on the 4 hourly. You guys see this? The inverse head and shoulders literally capped out at that 50 exponential moving average. Very important that was literally the pivot point, boom, okay, to the downside. So as we look at the higher thresholds here, I want to let you know on the 4 hourly, this 100 is in the way. All right, and it's nearly going to be even with the preceding level here, guys on the lower time frames, this flat top resistance, that next level up that I gave you guys, that 20, just say if we were to look back into this zone, it's in line with that top line resistance. If we go back into, let's see where we are at on that. If I can just remember the time frame that we were essentially on, it's going to be in that about 22.5 to 22.9, depending on the time frame, depending upon whether or not you're on the candle wicks, will give you the maximum. All right. If you want to be more conservative, you're going to drill down a bit into it, right? If you're going to be a little more aggressive, you're going to raise this line up, right? In line with the maximum level of aggression would be on the candle wicks. Candle wicks are the maximum expression of the price. You guys know that, right? On the lowest time frames, that's exactly where the price went to, right? And the lines are going to adjust on every time frame. So the 4 hourly, again, looking at that 4 hourly as we dig into, because the 100 and 200 have been beautiful. They have been absolutely beautiful. At some point, we're going to want to touch that 200, period. Now, it's going to come down to us, or we're going to go up to it. A little bit of both, right? A little bit of both is the idea. And at some point, right? At some point, us going up to it and it coming down to us. But there's going to be a convergence between that 200 and the price action. Even if we were to continue to go down, there will be a touch on that 200 exponential. So that 100 exponential is at that zone right now, that 22,500, just to be noted, along with the preceding frustration at the 50, that orange line, the 50 EMA on the 4 hourly. That's a critically thumbs up, high five. You guys got that in terms of a potential interrupter, whereas the full expression would be the 200 exponential moving average, that 20% move to the upside. Seems